What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel focuses on the bullish semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and trading method we use can be used to trade any company that's publicly traded on the US stock market. Make sure you hit the subscribe button and that notification bell. That way you're notified when we release our bonus content. We do release videos Monday through Thursday and once on the weekend, but from time to time we'll release that bonus content, so make sure that notification button is hit. Now, our nightly and weekend videos that we're doing here, not the bonus videos, but the nightly and weekend videos focus on identifying triggers and targets for trades ranging from scalps and intraday trades to long-term swings and leaps. So if you want a deeper dive into how we set up our charts and trading levels, make sure to go and check out the bonus content where we dive deeper into that. And if you want more information about the strat, which is the base of our charting and trading method, you can find more free information in the description of this video. Let's go ahead and jump into the video and check out the agenda for today. We'll go ahead and recap today's price action, and if you're not familiar with us, we'll go ahead and zoom out and check the week, month, quarter, and year price action. That way we're not locked in on some zoomed in view, but then we'll go ahead and go back, zoom in and set our 4-hour markers and our triggers and targets from an intraday perspective for Wednesday, and also review the triggers and targets for the week, month, quarter, and year. So just getting into that price action today, we had a good nice downside price action. We'll go ahead and just talk about the 4-hour markers first. We've got the previous high of day up here at 43.37. We've got the overnight high here at 43.12, this blue H, this dash dotted blue line. We've got the overnight low down here at 41.53 and the previous low of day at 41.66. Did I say this is 41.53? Anyway, 41.66 was previous low of day. We've also got this honorable mention market makers expected move high, 42.22. If you're not familiar with that level, make sure you check out our weekend or our Thursday night videos where we dive deeper into those market makers expected moves. And then we also have the opening print, which is marked here by this peach price level. All right, so opening print, overnight high, previous high of day, previous low of day, and overnight low. All right, so the general rules, if you're not familiar with this channel, we're looking for higher lows above the opening print to get into calls, and then we're looking for lower highs below opening print to get into puts. This is purely from a scalping intraday, especially beginning of day type of trade, right? This is not necessarily what you would be looking to do for a leap or long-term trade. This is for intraday trading. So we can see that we got the price action opened up here, a little bit of action above opening print. If you were in on the 1 minute, you might have been able to get a lower high right here, closer to opening print. But even on the 5 minute, we got the push down to this 250 fib extension from last Thursday's gap up, and that's where we got a slight bounce, but then we got the lower high, right? So this is when we get the lower high. Once this price action went below the low of this candle, that locks in this lower high, and we want to enter puts. The first target for puts is either previous low a day or overnight low, whichever one comes first. In this case, it's previous low a day and then overnight low. Now, there's not a lot of magnitude between these and the entry for this trade, so you would probably want to buy something at the money, in the money, multiple contracts. That way you can get your profit a little bit quicker. But we always, it doesn't mean you have to exit here. You want to continue to watch price action, and if we're getting downside momentum, continued downside momentum, then you obviously can stay in that trade and just manage the trade from there. Moving your stops to the next lower high as it makes lower highs moving down, or just whatever method you use to exit a trade. But just from a scalping perspective, those would be the two targets. Those were hit, obviously blown through those targets, and got a little bit of sideways action and continued to push down. So we got a real good dump today. Closed the gap from yesterday. Looked like we might even threaten the gap from 2 days ago, but did go ahead and level out. Some could say this is a bear flag that we've got here, right? Here's your flag pull, here's your flag. and we're just looking for the next leg down. The target for a bear flag or bull flag is, you take the distance of the pole and you add that to, wherever the end of the flag is. So this was what, 43 to 40, we'll say 39.50. So that's what, $4.50 move. So if we're at 39, we're looking at 350 to 34.50 as the next target if this is a bear flag, right? So kind of getting ahead there, but that's our intraday action. Was pretty easy to read today, and just continue to follow and look for these lower highs to move your stops down to, and then once you got the higher low here and the higher high here, we went ahead and exit. So nice profit there, especially if you're at the money, in the money. You've got multiple contracts. You should have had a pretty good day today. So that's how it looked intraday. Let's look at from the just purely day perspective. Let's go bring out a more clear chart. Let's go this. All right. So again, we came up to this clump of daily broadening formations. If we zoom back out, we can see the original daily broadening formation that was formed here at the beginning of that 11-week sideways action between 24 and 28. See, we got that higher high and the lower low here, which established this initial broadening formation. It came down, tested it, couldn't quite get back up, tested it again, and then ever since then we've been on the rise, and we're hitting that broadening formation, as well as a cluster of other daily broadening formations that were put up within this uptrend, or with this uptrend within this broadening formation. So we've talked about it for a while that this could be, we first talked about the weekly broadening formation. This purple line could be a point where we get some downside action. We saw that initial, and then it had to gap up in order to get over that broadening formation, but it ran into that daily broadening formation, and we can see we've now got that rejection of that particular level. Will we make a higher low? Right now we're in good shape too. If we can continue to press up, we are up overnight, not a whole bunch, but we're up. So that could mean that we get a push up in the morning tomorrow. Do we get above the high of this particular candle and go 2 up on the day? It's going to be a pretty hard push, but we are hitting a couple levels of intraday support. So we could see that bounce with this momentum that we got, right? A lot of people are just buying the dip. So it wouldn't surprise me if we get at the very least an inside day tomorrow, but even a 2 up day tomorrow where we get price action above yesterday's high. It wouldn't surprise me with how this market is going. Would I be betting on it? Probably not, just because of the levels of resistance that we're coming into, right? We're at the market maker's expected move high for the week. We're at this daily and weekly broadening formation. We're at the 100 fib extension of this 11-week range that we were in. So that's definitely reasonable to expect more of a pullback than we've already seen. Maybe create another daily broadening formation here, like that was formed here and here, to resolve a little bit of sideways action until we can see which way it's going. But right now, could be a higher low. Here's this soft higher low here, firm higher low here. So we've still got a lot of room that we can go before making a firm higher low from the day perspective. From the week, we have pulled back within last week's price action. Let's get there we go. So we pulled back. You can see the close here today was back within last week's price action within this wick from last week. So we're no longer in force with the 2 up. Right now it's looking like a failed 2 up, and we could even threaten a 3 or a bearish engulfing candle on the week, because we're still very early in the week. It's only the second day of the week. Still got 3 more to go. So it's also a short week next week. Those tend to be flat or red weeks. So I want to say tend to be, but this market has kind of been amazing since this April 7th low. So just to kind of keep that in mind. But we also have plenty of room to put in a higher low on the week perspective too. So even if we do go bearish engulfing candle on the week, it's not the end of the world. We've got support. Here's our breakout point from the 11-week range. It's been tested intraday, but it hasn't been tested from a daily or a weekly perspective, right? So that could just be the test of the breakout point, and that's where we find support, put in a higher low from the week perspective. So downside action isn't the worst thing in the world. Again, we are technically and seasonably the worst part of the year for tech. Again, haven't seen any weakness really here in tech, or especially in chips, but technically this is where it's supposed to be weaker. So maybe this was the top for the time being, and we're going to just go put in this higher low somewhere on the week perspective, at the very least on the day perspective, which we've already looked at. The month, again, we were in really good shape, but we've kind of pulled back in. Let's go ahead and remove this. So we've pulled back in, we've pulled back 50% of the move that we've made this month already, is what I'm trying to say, basically. So we've got a big wick on top, meaning we've explored price action above. It's been rejected. Now the candle's not red. We're still green. So it could be what some people call a momentum shooter, or a momentum inverted hammer, where you get an inverted hammer, but it's the same color as the direction that you're going in, which would be to the upside. So it's not the most bearish thing in the world. Price is still above the high of last month. So again, we're still looking good from a month perspective. From the quarter, again, we're still looking good here as well. Now price did pull back within the one of the one combo 2 down, combo 2 up, but it's still above the trigger, which is the high of this 2. So as long as we're above that 36.15, we're still in force with the one combo 2 down, combo 2 up. Again, the magnitude for that move is 70.08, which is the high of the candle to the left of the one. Again, not saying we're going to make it this quarter, but that is the target as long as we remain above this 36.15 level. So again, still looking pretty bearish. The year, again, if you're not familiar with this channel, we did start out rather bearish, right? We had a 1 2 up 2 down trigger, which had a magnitude of the low of the candle to the left of the one, which was $6.21. In April, we got that 723 low. So we have been able to reverse that. We're looking at a green, hammerish candle is from just a purely candle perspective. It's more of a bullish candle than a bearish candle. From a trend perspective, we're putting in a higher low compared to this low here. So that's also looking good as well. And then if we can finish out this year strong, then we're that much closer to going 2 down, 2 up on the year, which has a magnitude of, again, the 70.08. So long-term perspective, especially staying above the 36.15 level that we've talked about for a long time in the past, and above the year flip, this 28.13. As long as we can keep that year green, from a long-term perspective, things should be pretty bullish, right? So that is the intraday and the zoomed out look at the day. Let's go ahead and prepare for, we'll look at the scalping chart for tomorrow first, and talk about the 4-hour markers and the triggers and targets that we've got for tomorrow. So we can see it's got kind of a busy chart here because I've got these fib extensions on. Yeah, so we've got the previous high a day up here at 43.02. Overnight high is not 43.12. I just haven't moved it yet. It's going to be different by the time the market opens tomorrow. Overnight low 41.61, same thing. That'll be in a different place. But we do have previous low a day here at 38.70. So we've got our 4-hour markers, and say we do get that push up in the overnight and we open up, above where we close. Say we open here at 40.21. The same rules apply, right? We're looking for higher lows above 40.21 to get into calls. First target would be previous high a day or overnight high, whichever one comes first. And then same to the downside. We're looking for lower highs underneath opening print, this 40.21. So lower highs underneath here. We're looking for previous low a day and overnight low. Whichever one comes first is first. Whichever one comes second is the second target. If we, go past the overnight high, overnight low, previous low day, previous high day, whichever direction we go in, then we start to roll into the 4-hour and day triggers and targets that we'll talk about here in a second. But just so everybody has the repeatable strategy down, it's not hard. We just got to stay disciplined when doing it. But we're looking for, if we open here, price action pushes up, say it makes this higher high here on a short time frame perspective and pushes down, and we get a higher low above this level, we're getting in calls, and we're looking for overnight high and previous high day. Again, if we open here and push down, say we get a little bit of a bounce, but then we reject below opening print, we're looking to get into puts targeting previous low day and overnight low. Right, so again, not too hard, but you just need to stay disciplined, and it pays off in the end. Right, so going to the 4-hour perspective for a more of a day trade, longer than just a scalp. Doesn't necessarily need to last the whole day, but more of again, something longer than a scalp. We can see we've got this 11-week range here. We've got the breakout here. Like I said, somewhat of an intraday retest of that breakout level. With the gap up, we came back, pretty much closed the gap, and then took off again. So we've had a lot of momentum to upside, hitting these levels of resistance now. So if we get priced to the downside, we've got a two down continuation triggering at the low of this candle, which is 38.70, and we're looking for at least the top of the gap. We've talked about in the past how tops or bottoms of the gap can be bounce points, and we've shown plenty of history of that. But if we do penetrate the gap, then obviously we're looking for the gap close, and that, is, I guess it's not curious, but it lines up pretty much perfectly with the last week's 50% line, right? And we've talked about how in the past, if we do get price action that falls back within last week's price action, the first test is that 50% line, and you're looking for a bounce there. But if we do get through there and some type of lower high below the 50% line, then we're looking to target the bottom of the bottom of last week, which is just slightly below the market maker's expected move low here of 34.17, I think it is. So again, for 4-hour, more of a day trade, we're looking at the two down on the 4-hour chart, triggering at 38.70, and looking for the magnitude of that move is 37.62, which is the top of the gap, and then finally with the gap fill down to that 36.98 level. To the upside, we would have a 2 down, 2 up, much more magnitude on this move, or there is magnitude on this move because it's a reversal. Continuations don't have magnitude, just have a clear trigger. But we've got our clear trigger at the high of the second 4-hour candle of today, which is 39.60, and the magnitude for that move is the high of the candle to the left of it, which is 43.02. Right, so 39.60, 43.02. It's a pretty big move, right? Past that, we have some extended targets of the high of this candle and this candle, just leaving those as simple targets, because that would be such a big move on the day that probably couldn't expect too much more after that. If we look at the day chart, I'll just bring up a little cleaner chart. Let's go to the day. Right, again, we're getting rejection off of this daily broadening formation. We got the 3, 2 up, 2 down, hasn't quite reached magnitude, which is the low of this 3. So if we do get price action to the downside tomorrow, that's a 3, 2 up combo, 2 down. Again, magnitude being the low of this candle, 37.62, which is the top of the gap, with an extended target of the gap close. And then we've got last quarter's high here, and I think there's another intermediate target here. We'll look at it here in a second when we get to our notes. To the upside, we would have a 2 down, 2 up. Not a lot of magnitude on this one, right? Triggering at the high of this candle, 43.02, with the magnitude of the high of this candle, which is 43.37, so 34-cent move. But if it were to make it up to this level again, that's a pretty big move on the day to recover from today's kind of rug pull for anybody that was still buying longs at the top here. And that gives us a chance to put in this higher low from a day perspective. But let's go ahead and switch to our notes here so we can just look at the numbers here. Again, these are for Wednesday, October 8th. that on Wednesday there will be 57 trading days left. The previous close will have been 38.83, which is today's close. So we are red on the week because we're below this 42.83, which was the opening print, but we are still green on the month, green on the quarter, and green on the year. These are what would flip the quarter red or the month red. This is what would flip the quarter red and what would flip the year red. We have the market maker's expected move that we've talked about, $33.99 plus or minus what the close was on Friday. That gave us a range of 42.22, which we already breached above, and a low of 34.24, which, you know, we've still got room to go, sitting at here at 38.83. Just going to our triggers and targets, we talked about the scalping. Don't need to put those down because we don't know where overnight high, overnight low will be, where opening print will be. We can just, kind of do that by memory, right? But from the more of an intraday perspective and maybe the overnight swing perspective, this 4 hour and day perspective, we've got the to the downside a 2 up combo 2 down that triggers at 38.70, intermediate target of 38.14. And then just again, because we are in this uptrend, that's why we want this intermediate target. But the magnitude of the move is this 37.62, which is the top of that gap. If we get the price action to the upside, that triggers at 39.60, the 2 down, 2 up, with a magnitude of 43.02. So again, another big move, $3.50 move at the least, with an extended target of 43.37, which was the high from Friday. From the day chart perspective, we would have that 2 up combo 2 down triggering at 38.70. Again, that intermediate target of 38.14, just because we're in this strong uptrend where people are buying the dip. But if it were to make the full move, again, that magnitude is 37.62. To the upside, that would be a 2 down, 2 up. Again, not a lot of magnitude on that, triggering at 43.02, but it would have had to fight back all the way from 39.60. So that would be, couldn't expect too much more on the day at that point, but the magnitude would be 43.37 for that move. Extended targets of 43.80 and 44.24. All right, we already looked at the week chart, the month chart, the quarter, and the year, so I won't go back over those so I don't drag the video out. But again, I just want to take note, we are no longer in force on the week, right? If we were, this would be bold, so meaning price closed today within last week's price action. So we did trigger the 2 up at 40.06, and we knocked out a couple of the targets. But we're still looking for those extended targets if we can push back to the upside. If we do go red 3 on the week, or a bearish engulfing candle, that would trigger at 33.57, and we would have targets of 33.18. This should be 32.76. I apologize. So the targets would be 33.18, 32.76, and 32.39. Again, from the month, we are no longer in force because, again, that triggered at 40.06, and we're sitting here at 38.83. But we did trigger the 2 up, hit a couple of these targets, but we've still got the extended targets here in case we can continue to push up through the end of the month. On the quarter, we are still in force on the 1 combo 2 down, combo 2 up. Remember, we reached the magnitude of the 2 down, combo 2 up, but that triggered the 1 combo 2 down, combo 2 up. That triggered at 35.49. And again, as long as we're above that 36.15, we are in force. Again, we've reached a couple of the targets, but we do have these extended targets here out here to reach, and of course the magnitude of 70.08. Again, we talked about on the year, we did trigger the 1 2 up 2 down on the year, which is pretty bearish, but we were able to reverse things, put in what seems to be a higher low from the year perspective at this point, and keep the uptrend intact from the year, and turn things around. To go green 3, we'd have to hit that 70.08. I highly doubt we're going to do that, but we've still got it on there because, again, we are ready for price whichever way it goes, right? So there are your triggers and targets for tomorrow and beyond. I hope everybody enjoyed this video. If you did, please give it a thumbs up. It really helps the channel grow. Again, not selling anything here, just trying to jam pack in as much information as we can in a good 20, maybe 30 minutes of video. One cut, one shot, not a whole lot of editing, and just trading shouldn't be too hard. It should be easy like that. So if you can master a strategy that is repeatable, and you can, it's proven over the course of time, stick with it, and again, trading shouldn't be too hard. So If you have any questions, definitely let us know in the comments of this video. We'll be glad to answer them. If you have any other comments, have any problems with the videos, let us know. Be constructive. Don't tear our heads off, but let us know. We'll be glad to respond in kind as well. Well, not in kind, but we'll try to make the changes that are suggested to make it a better viewing experience. But I appreciate everyone that has subscribed so far. Channel's grown a lot more than I ever thought it would, or ever. Yeah, basically ever thought it would. I didn't think that we'd have more than maybe 100 or so followers, just because I guess I don't know. I guess this style may be resonating with more folks than I expected. So that's a good thing, and we'll keep pumping out these videos Monday through Thursday and once on the weekend. So make sure you get some good rest tonight and wake up refreshed tomorrow. I look forward to seeing you out there trading.